Good evening, everyone. I'm CA Rakesh Parekh, moderator of this webinar. We are delighted to welcome you all in the webinar being organized by Continuing Professional Education Committee of ICAI. It is my pleasure to be moderator for the webinar on Code of Ethics and Opportunities in IFSC and GIFT City. In a short while, we will start this webinar. First, I would like to appraise you about CPE committee. In today's ever-changing professional scenario worldwide, the biggest challenge the professional face is how to stay on the top of their game while adopting new requirements and norms. Therefore, it is imperative to aim to be up to date, to offer unique guidance, influence others with their innovative approach and expertise. It is also vital to stretch old ideas beyond traditional boundaries to create new perspectives. In this context, continuing professional education facilitates professionals to maintain, improve, and broaden their knowledge, skills, and expertise required to achieve their professional goals through webinars, seminars, etc. The program of this evening is as follows. We have two sessions, one or each, and topics are practical aspects of Code of Ethics. Another topic is opportunities in IFSC and GIFT City. Our eminent speakers will talk about above mentioned two emerging areas of professional interest. CA Gyanchand Mishra is Vice Chairman of CPE Committee and Chairman of Committee of Insolvency and Bankruptcy of ICAI. Presently, he is serving the Institute of Chartered Accountants of India as Central Council members and convener Tender Monitoring Committee of ICAI. He has more than 24 years of professional standing to his credit as an established chartered accountant. Under his vision, this year CPT committee is taking new initiatives for the members. Now I welcome Vice Chairman Sir to give his opening remarks in today's seminar.
So thank you, Rakesh ji. Very respected Chairman of the committee, C.A. Purushottam Bhai Khandelwal ji, my good friend from Ahmedabad, who is traveling and smiling. Speaker of today's program, Parag sir and Jay sir, Secretary of the committee, Ajita Tiwari ji, and of course, Moderator Rakesh ji, and all the respected participants. Good afternoon to one and all. Friends, as we all know that every Wednesday, some learning session is being done by CPE committee. And in continuation to the same, today, two important topics are to be discussed. The very important is Code of Ethics, and I will say not less than important is IFSC and GIFT City opportunities. Friends, Code of Ethics, if we see, is a very integral part of practice for the chartered accountants. It is none than our moral values, what we carry towards the profession, and the standards being set by our forefathers in form of the notification from time to time by the council members. I am sure that IFSC and GIFT City opportunity, which is of course very unique model being established in Gandhinagar of Gujarat state, is very much beneficial for the members at large. Friends, we all know that 31st of December, this calendar year, is last date to complete the CPERs for the various professionals, whether in practice or in service. And as of now, we are not expecting any date extension, so we'll request all the members to kindly complete your CPERs requirement as decided by the council. The second important thing that I would like to request all the members, that some sort of penalties are being proposed by the council if the CPERs are not completed in coming times. For that exposure, Ajit ji, I'm correct? Exposure has been sent?
Yes, sir.
Okay. Yes. So for that exposure has been sent to all the members. We'll request all the members to kindly respond to the exposure so that appropriate guidelines with respect to the non-compliant members could be framed, and that could be made available to all the members in coming time. Council is very serious about it. That learning doesn't mean that only this is arts learning. The learning should also be productive and output based. This is another area where the chairman sir is working very hard. Technology very core to heart of the chairman sir. And 2 days back only we had the meeting of the CPE committee, and there he very much emphasized with respect to the mobile app and upgradation of the website of the CPE committee. All these things are in pipeline. Will not speak much. I welcome my both speakers of today's program, Parag sir, who is very senior member from Ahmedabad, and Jay Bhai Saha, who is also senior member from Ahmedabad itself, will be speaking on the IFSC and GIFT City. So thank you very much, committee, for this opportunity, and we assure that we shall try our best to provide more and more knowledge updation session in coming time. Thank you very much.
Thank you. Thank you, Misra sir. Our CA Purushottam Khandelwal is a chairman of CPE committee of ICI, vice chairman of committee for members in entrepreneurship and public services, and convener of RBA directorate of ICI. He is serving 25 years post qualification experience in the field of audit, direct and indirect taxes, and intellectual property rights. This year, he is devoted to fortifying CPE framework and guaranteeing quality across its entire professional spectrum. And this year, major focuses would be on upgrading of CPE portal for enhancement of the branding and professional competency of the members. Now I request CA Sri Purushottam Khandelwal to give his welcome address.
Good afternoon, very respected Vice Chairman of the committee and my dear friends, Gyan Sanji Misra, two respected faculty, CA Parag Bhai Rawal, under whom I groom. I started my journey from 2007 when the Parag Bhai was a chairman of Ahmedabad branch, and then later on the Parag Bhai was a vice chairman of WIRC. Since they are guiding me, a second faculty is a Jay Shah, his father, under whom I undergone the articleships, and my dear friend moderator Rakesh Parikh, secretary of the CP committee Ajit Nath Tiwari ji. It gives me immense pleasure to be amongst you. And this year, a CP calendar is going to be end on the month of this December 31st. And every member has to complete the CP hours in this month only. We are not going to increase any dates. I'm sure that you have already completed the CP hours. We have already, just Gyan Sanji has already told that we come with the exposure draft. And I request all the members, those who are listening me, please give your comments that we are trying our best to take a horse to the pond, but the ship of water has to be taken by the horse only. So our best efforts to organize a wonderful program, very important programs related to the profession. The today's two faculty, Parag Bhai is taking code of ethics. Is a very important, and we are a unique profession, and every member of the profession is abide by the code of ethics. So it's very important, and that these two CP hours is also compulsory for the code of ethics. And another a GIFT City, which is a dream project of Narendra Modi ji. GIFT City is a foreign within India, and all the rules and regulation will be separate for the city within GIFT is outside city within India. So there are a lot of opportunity in IFSC and GIFT City. Those will be very benefited by the Jay Shah. He will guide you what is the opportunity in the GIFT City. So I will not take up much of time because the Gyan Sanji and all these faculties here. Thank you so much for joining and giving me the opportunity. Parag Bhai, thank you so much. And Jay, thank you so much for being devoted time. Rahul, Rakesh Parekh ji is also member of the CP All India Committee, and he's already taken a number of years to develop the study circle at Gandhinagar, state capital of Gujarat. So your contribution is always positive. Thank you so much. Hand over charge to the Rakesh Parekh ji. Thank you so much.
Thank you, sir. Now I will introduce today's faculty, CA Parag Rajnikant Rawal sir. He is a convener of Accounting and Auditing Standard Committee of Ahmedabad branch of WRC of ICAI for the year 2023-24. He has been playing a key role in the progress of LSB Study Circle of WRC of ICAI since February 2005. He has also delivered various lectures about professional interest on multiple platforms. Now I request CA Parag Rawal sir to give his experience on practical aspects of code of ethics.
Yeah, thank you so much, Rakesh, for the nice words of introduction. The Honorable Chairman of CP Committee of ICI, CA Purushottam Khandelwal, the Honorable Vice Chairman of the CP Committee, Gyanchand Misra ji, Honorable Secretary of CP Committee, Ajitnath Tiwari ji, my dear friend from Gandhinagar and the moderator of this session, CA Rakesh Parekh, my co-speaker from Ahmedabad, CA Jayasha, all the committee members of CP of ICI, and all the members who are participating in this webinar. I welcome you all to this session. And my topic is the Code of Ethics and its implications and the practical aspects. Before I take you directly to the my presentation, let me take you through the ethical standards as well as the accounting auditing standards. Friends, it has been noticed since long that ethics and accounting standards in our professional life has taken a backseat in our professional life. It is also ironical that despite we do read a lot of material on GST, Income Tax, Companies Act, but when it comes to accounting, auditing standards, and ethical standards, we tend to treat these accounting, auditing standards, and ethical standards as if we know everything about this. There is no need to study about ethical standards and accounting auditing standards. And irony is that we also tend to treat these standards as if there is no need to comply with it. The history says that whenever there is a conflict between the ethics and the economy, the victory always go with economics. Our economic interests prevail above the ethical standards as well as the accounting auditing standards. We try to compromise when the economic interests are, and we give the good importance for the economic interests. That is really eye-opener and ironical on the part of the professionals. Very few members of our institute would come to know about the number of auditing accounting standards in existence. Only 5% of the members would say that how many existing standards, accounting auditing standards are in existence, meaning thereby 95% of the members do not know the number of auditing standards and accounting standards in existence. Only CA final student would know the exact number of ethics standard as well as auditing accounting standards. And that poor student, he knowing the numbers because he has to answer the questions in his CA final examination. Otherwise, that student would not have studied the ethics standard as well as the accounting auditing standards. And the moment he qualifies as a chartered accountant, the books on ethics and books on accounting auditing standards are parked into the cells, and he enjoys the life all throughout. What is ethics? Ethics is a behavior. Suppose you go to a lawyer, you expect certain treatment, certain services, certain behavior from the lawyer. This is behavior, this is ethics. Same way, the client come to a chartered accountant, pay the fee, and as a reward, he also want certain behavior, treatment from chartered accountant. And these ethics cannot be taught. These ethics cannot come to know by reading, but ethics should be in our sanskar. And many things we tend to believe that it is legally allowed, and we forget about ethics. Whenever we come to conclusion that certain things are legally allowed, and we tend to believe it is ethically allowed, ethically permitted. But however, friends, it is not the exact position. whatever legal may not necessarily be ethical. For example, political party gives ticket to a third class fellow to gundas. We also discuss in our whenever we meet the friends that party has given the ticket to people who are not really genuine. This is maybe legal, but not ethical at all. So friends, everything which is ethical is bound to be legal. Whatever is ethical cannot be illegal. Ethical things cannot be against the law. Whatever is permissible may be legal, but not ethical every time. For example, a person sitting in jail is allowed to contest the political election. A person sitting in jail is also allowed to cast his vote into political elections. These all are maybe legal, but not ethical at all. Similarly, a book written by a chartered accountant on the topic how to evade the tax, how to convert black money into white, and how to commit frauds. These all may be legal, but not ethical at all. So many things we tend to ignore, many ethical things we tend to ignore on the plea that it is legally allowed. So it is not a good position. To my mind, whatever brings disrepute to our alma mater, the Institute of Chartered Accountants of India, is unethical. Even we cannot hold books of the client on non-payment of fee. We cannot hold the release of audit report for non-payment of fees by the client. If we do so, it's a kind of extortion. Ethics means values. One can be transparent, but one should also be at the same time accountable for his deed to the society. The whole foundation of any profession, and more particularly the CA profession, is its credibility and its integrity. And the sole purpose of code of ethics is to ensure and uphold this credibility and integrity. There is a criticism against the council of an institute or the disciplinary committee of the institute that they take considerable time in making the decision, and the punishment awarded to a errant chartered accountant is mild. And that's why there is a lot of requirement by the society that code of ethics applicable to chartered accountants must be somewhat stringent. And ethics are nothing but the laws of rules and acceptable behavior. And that is why every authority, we should be very vigilant these days, because every authority has now, after chartered accountant, wherever or whatever corporation, whenever it went wrong, the CAs are being held responsible. And now the latest development is that, friend, you must have read in the just recent past that NFRA is now above the ICI. The NCLAT, National Common Law Appellate Tribunal, on 5th of December 2023 has upheld the decision taken by NFRA, who punished the errant chartered accountant in the fiasco of DHFL, Divan Housing Finance Limited. You must be aware about the fiasco or debacle of DHFL. In that case, NFRA punished the errant chartered accountant. The matter went ahead. The NCLATA ruled that NFRA is above the ICI, and the penalty imposed is very, very much within the law frame. So now one more authority is above the ICI. So we should be very, very much aware that NFRA is also a body which is the suggestion and the guidance given by NFRA should be implemented in our practice. Now I'm coming to the slide presentation. Rakesh, am I visible, Rakesh? Rakesh?
Yes, sir. Visible.
My slides are visible, Rakesh?
No, sir. Your slides are not visible.
Rakesh, now slides are
Yes,
visible?
sir. Yes, sir. Your
Yeah.
slides are visible.
Fine. Our institute is a member of IFEC, International Federation of Accountants. IFEC follows the standard of International Ethical Standard Board of Accountants, that is popularly known as ISBA. So IFEC follows the standard of Code of Ethics as laid down by ISBA. And since India or ICI is a member of IFEC, we also follows the standard of ISBA. And whenever ISBA come out with the change or revision into the ethical standards, ICI also tend to revise their standards. Our earlier code of ethics are also wholly based on the standards as laid down by ISBA. And our current one is also we have carried out the revision as ISBA has come out with the revision of ethical standard in the year 2018. We know that our earlier code of ethics was divided into two parts, part A and part B. And as I said, our existing code of ethics were approved by council in the year 2018, issued in the year 2019. It has come to effect from 1st July 2020, applicable to all chartered accountants, whether into job or into practice. And it is revised on the basis of the ethical standards as laid down by or as revised by the ISBA. As I said, the earlier code of ethics were divided into two parts, part A, part B, and the recent one is divided into three volumes, volume 1, volume 2, and volume 3. Volume 1 and volume 2 are more or less the replica of the earlier ethical standards. And as you see in the screen that volume 1, it contains the standards applicable to all chartered accountants, whether into job or into practice. We all have to comply with code of ethics, and fundamental principles and conceptual framework is also laid down in volume 1, which provides the useful guidance to member how to approach, how to interpret, and how to follow the guidelines or ethical standards laid down in volume 1, volume 2, volume 3. Part 2 of volume 1 is a set of code of ethics applicable to all CAs in service. Part 3, code of ethics applicable to all chartered accountants in practice. And part 4 is on independent standards. Earlier, it was only known as independent standards, but in the new code of ethics, it's been revised as a international independent standards, meaning thereby we are now trying our level best to comply with international standards. So it's a good sign on the part of the institute. Volume 2 contains the accounting auditing standards, the CA Act, the guidelines for advertisement, the Council Guidelines 2020, and the self-regulatory measures. The volume 3 is very much important, friends, because it's like a case law referencer. It has given various case laws decided by Ethical Standard Board and various courts dealing with various schedule as covered under the Chartered Accountant Act. Schedule 1, Schedule 2 contains various clauses, and whatever case law decided by these various authorities are covered for the useful guidance of members into volume 3. Then that is why I always advise members to do read volume 3, which it will give you the better understanding of the ethical standard laid down by our institute. As I said, that volume 3 is a case law referencer. It brings about subject-wise disciplinary cases that a member in practice or service must have in mind while performing the attest function. It also contains the improved guidance on number of issues, for example, other misconduct, and lot of instances have been incorporated and updated in volume 3. So it is very useful or handy material to understand the ethics and ethical values. As I said, it also laid down the conceptual framework which guides the member to identify the threats threats which are very, very useful to identify and in compliance with the attach function and fundamental principles. We are supposed to evaluate the threats identified, and we have to see and take the appropriate safeguard that the threats are being eliminated or reduced to an acceptable level. So useful guidance has been given in conceptual framework as well as fundamental principles laid down in volume 1. Podcast. Many members are uploading educational videos and lot of material on podcast. Then the question arises, how you deal with the podcast? Are there any guidance? Then ICI has come out with a useful guidance, and they have mentioned that code of ethics shall be applicable to all forms of use of social media, including podcast for the dissemination of information. So when a member is undertaking such activities, reference should be made only to us. Reference should be made to the should not be made to the CA firm where the member is a partner or proprietor, and the web podcast should not contain any contact details or web address. So guidance has been laid down, and we have to ensure that such type of whenever we conduct podcast, we should not mention our firm name or the contact details on the web on this podcast. Similarly, friends, many members upload many educational videos on the podcast on the YouTube. ICI also come out with the useful guidance whenever there is a video uploading by the member on YouTube. So you are also aware that many members are uploading their educational videos on the YouTube. Then ICI is clarified, the ethical standard board has clarified that intention behind the person of uploading the educational videos on the YouTube for imparting knowledge is very important. If video on education content uploaded on YouTube with the intention of earning money or commercialization, then it is of course a crime. But if you share videos on YouTube not for earning your intention is not earning the revenue, then it is permissible. So the guideline has been issued by the ethical standard board, and it is for the benefit of members. Many members try to indulge into various other occupation. They try to become the trademark attorney or patent attorney. The board has clarified that the professional advice in relation to intellectual property right is a routine professional work. So consultancy or advisory in the case of, so far IPR is concerned, it is totally permissible, not prohibited to a practicing chartered accountant. The board has further clarified that since there is no express provision in the code of ethics regarding for a member in practice to act as a trademark attorney or the patent attorney, and hence to act as an attorney or advocate on these issues is not permitted to a practicing chartered accountant. So very useful and very clear guidance has been laid down by Ethical Standard Board. Many members give information of their client without the consent from client to the credit rating agencies. You know, friends, any information of client to be shared to any authority without the consent of client is not permissible. If you do so, you may have to face music. You may be held guilty under professional misconduct. So, mind well, friends, don't share any information of your clients to the credit rating agencies without prior and specific approval by the auditee. Earning royalty by selling IPR of domain. Many members are techno-savvy. They are very well, their knowledge is very, very useful for creating IPR domain. And they now also started selling this IPR domain, and they started earning royalty. If you are a practicing chartered accountant, selling domain names for earning royalty is not permissible to you. It amounts to other business or occupation, which is strictly prohibited for the practicing chartered accountants. If you do so, you may be placed under hot water. If you are doing the audit of listed company, or if you are conducting limited review of any enterprise or any company, and if you don't have a peer review certificate valid on that date signing, then it is not proper. You are guilty under professional misconduct. So whenever you sign whenever sign your financials of any company, particular listed company, or you conduct limited review of any company, then you must possess the valid certificate on the date of signing. Otherwise, you are guilty under professional misconduct. It has come to the notice of ICI that many members who were director of a company, soon after retirement, they started taking auditorship of the same company. For example, Mr. X, a practicing chartered accountant, who was a director in a company and resigned on 1/4/21, 1st April 2021, he resigned. He accepted the assignment of statutory audit of that company on 30th September 2022, meaning thereby after 1.5 years. Whether the act is permissible? The answer is no. The guidance to a member is a member shall not accept the assignment of audit of a company for a period of 2 years from the date of completion of tenure as a director or as a resignation from director of the said company. So you have to wait for 2 years after resigning from the company as a director, and after 2 years only you can accept the appointment as an auditor of that very company. So don't commit a mistake, or else you have to face the music. Certain recent case laws decided by Ethical Standard Board, I am putting with you. It may not be the case now, but the useful guidelines given by the Ethical Standard Board. I am presenting before you for your useful information. Friends, you know about the Udyog Aadhaar. It is a web portal launched by the Ministry of Micro, Small and Medium Enterprises. So Ministry of MSME has come out with the web portal of Udyog Aadhaar. CAs may enroll or register themselves on Udyog Aadhaar, and the work may flow to the concerned member. So ICI has come out with the guidance that members are permitted to enroll themselves on Udyog Aadhaar. There is no prohibition. So we can take the advantage of this guidance. Same way, there is another portal known as Government E-Marketplace, very popularly known as GEM, GEM, Government E-Marketplace. Those vendors or supplier who are supplying their goods, or those service provider who are providing their valuable services to the government department, organization, government undertakings, and all that. They have to register compulsorily on this portal known as Government E-Marketplace, and CAs are also permitted to enroll themselves on GEM, so that whenever government undertaking organizations are seeking service of chartered accountants, they floated a tender on e-marketplace, we can respond to the tender following the tender guidelines. So this is also a portal very useful, and work may flow to you, and CAs are permitted to enroll themselves on the GEM portal. I also advise all the members to register themselves on Udyog Aadhar as well as GEM portal. It is permissible to all practicing chartered accountants. Continuing the GEM portal, it was clarified that the firms of CAs are permitted to register on GEM portal for rendering professional services, and there is no violation of the code of ethics and norms of the ICI. And such registration on the portal is requirement for providing services. It's a prerequisite, and now it is permitted to all practicing chartered accountant. It was further clarified that whenever you respond to the tenders floated on GEM, you have to implement the guidelines of tender. You know, friends, that if you are the auditor of a company, if you are the statutory auditor of a company, you cannot hold the shares of that company. But what if you are the internal auditor of a company and you acquire the share of that very company? Is it permissible? The case law has clarified that if you are the internal auditor of a particular company, you can hold the shares of that particular company. So there is no prohibition. So it is very useful clarification by the standard board as well as the institute. We can plan our efforts in this direction accordingly. Many members start using WhatsApp and they float messages that I'm a chartered accountant. It is my firm name. I'm into practice since many years, and my expertise into these fields. It is not permissible to a practicing chartered accountant to market their services, to advertise their services through the medium of WhatsApp. And if you do so, you are certainly guilty under professional misconduct. Friends, you know that practicing chartered accountant is allowed to become a director solicitor in a company. Director solicitor means a person who is not drawing any remuneration from a company, not devoting any time for the company's business, and not devoting any time except the time for board meeting, attending board meeting. Otherwise, you are not a director solicitor. And when you are a director solicitor, then you cannot jump into the day-to-day business of the company. In one of the case, the director solicitor signed the forms of ROC to be submitted in the ROC office, and he was held guilty under professional misconduct, because being a director solicitor, you cannot do the day-to-day or routine business of the company. Friends, you know that a lot of foreign funds are being infused into the Indian economy. My co-speaker will also address that GIFT City in Gujarat and Gandhinagar is flourishing a lot. Lot of foreign clients are coming to India to invest or to do business or provide services through GIFT City IFSC. And friends, in that case, many foreign company approaches to a practicing chartered accountant, appointing them as an authorized representative of the company. On their behalf, we are negotiating with various vendors, various government agencies, various authorities like Income Tax, GST, Companies Act, and we do a lot of work on their behalf as an authorized representative of the company. ICI has permitted to a practicing chartered accountant to be appointed as an authorized representative of the foreign company. However, if you are the statutory auditor of that company, you are not eligible to act as a representative of a foreign company, because statutory auditor cannot take other services of the company. Hence, whenever you are appointed, mind well friends, you should not be a statutory auditor of that company. Now, partially we are allowed to advertise or to market our services. Of late, ICI is taking certain decisions in favor of practicing chartered accountants. And now a CA in practice can put a kiosk outside his office showing the services which are permissible to a chartered accountant outside his office. So earlier, those who are senior chartered accountant must be aware that there was a strict restrictions, or the rules of advertisement were very stringent. But now ICI has taken a pace with the changes, and members are now allowed to showcase their services. Those who have attended the World Congress of Accountant and of late the GLOPEC, which is held in last month, the CAs were allowed to showcase their services, market their services, which was the dream for practicing chartered accountant in the good old days. So good guidance have been given to member in this fashion. Friends, if you are the auditor of a bank, supposing there is an XYZ bank, if you are the statutory auditor of the bank and you are taking loan against FD of that bank, is it permissible to you? It is not permissible to you, friends, because you are indebted to a bank for more than rupees 10,000. You know our auditing accounting standards. You know about the Companies Act. You know about the qualifications and disqualification of a chartered accountant when taking the except in the company. Here, if you are a statutory auditor of the bank, you cannot even take the loan against FD of the particular bank. If you have taken the loan, you cannot accept the appointment, because from the day one you were ineligible to do the attest function. So in this case, the CA was held guilty under professional misconduct. So knowingly, unknowingly, we commit mistakes which may in future prove to be detrimental to a practicing chartered accountant. So mind well, friends, whenever you're committing certain things, do take very good care of the ethical standards prevalent. I talked about the loan. What about the credit card you are holding in a bank and you are the statutory auditor of that bank? Supposing I am the holder of HDFC credit card and I am also the statutory auditor of HDFC bank. Is it permissible to me? The ICI has come out with a clarification that outstanding balance on the credit card should not exceed more than rupees 10,000 beyond the prescribed credit period limit. So if you have paid your entire dues within the time, then it is permissible to you. Otherwise, if the outstanding are more than rupees 10,000 and beyond the credit period, then you become ineligible to conduct the audit of bank. CAs in job, that is in CAs in service, are allowed to take e-written registration if their employer allowed them to undertake. So they can take the e-written registration and they can upload various returns of the company and their employees. But to certify the return or its content or issue a certificate is not at all permissible to a person who is into service. So those who are into job or in service, they cannot do any attest function. They cannot do any issue any certificate. They cannot carry out audit. So knowingly, unknowingly, we commit mistakes, and in this case, the member was held guilty under professional misconduct. So, friends, if you are a statutory auditor or if you are a non-executive director of a company X, the X company of which you are the non-executive director entered into joint venture with, say, P, Q, and R companies. In that case, you cannot become the statutory auditor of P, Q, or R with whom X company entered into joint venture. I repeat, X company in which you are the non-executive director enter into joint venture supposing PQR companies, you are not allowed to accept the auditorship of P, Q, or R, failing which you may be held guilty under professional misconduct because it violates your independence. You must be aware about the guidance not on independence issued by our institute. CA in practice is allowed to act as an equity research analyzer. It is the expertise of a practicing chartered accountant to analyze various things. You can do research, you can advise the client, you can also give the consultancy in this field. However, to issue retail report, to publish retail report is not allowed to a practicing chartered accountant. So my dear friend, you can act as a equity research analyzer, but issuing or publishing the retail report is not permitted to you. We should not commit a mistake. If I am a member of the trust, I cannot do the audit of that trust. Taking a clue, if I am a member of a society in which I am residing, I cannot undertake the audit of the society. So this is the thing which is we all should know very carefully while accepting the audit. CAs are allowed to engage himself as a registering authority so far DSC is concerned. If I have, say, supposing I have 100 clients needing DSC, I can register. Despite the fact I am a practicing chartered accountant, I am allowed to take registration as an authority for DSC. However, if I start selling DSC to the entities or person who are not my clients, then it's a business or other occupation, making me disqualified, or I may be held guilty under professional misconduct. So mind well, friends, you can manage DSC for your clients, but not for not for the entities or organization other than your clients. We can act as a mediator in court. The matter travel to ethical standard board for the review. The ethical standard says that practicing CAs are allowed to become arbitrator. And arbitrator is a very broad term which also include mediation. So it is permissible to a practicing chartered accountant to act as a mediator in the court. So it's a very good welcome clarification by the ethical standard board that CAs are permitted to act as a mediator into the court. Practicing CAs are not allowed to take agencies of UTI or GIC or NSDL. As I said earlier, we cannot exercise lien over the books and documents of client for non-payment of fees. It is unethical. Many CAs tend to publish their vision, virtues, values on visiting card, on letterhead, and various other stationery. We are not permitted the all such things. If you do so, you may be held guilty under professional misconduct, friends. Again, very useful guidance. If you are the statutory auditor of a bank, supposing you Gandhinagar branch and SBI Gandhinagar branch offers you the stock audit, can you accept the stock audit? No, friends. The SBI branch Gandhinagar, of which you are the statutory auditor, if it offers a stock audit to you, you cannot accept the audit. Not only this, you cannot accept the audit, stock audit offered to you or by any of the branches of State Bank of India. And not only this, if you are the statutory audit of SBI Gandhinagar branch, you cannot accept the stock audit offered to you by SBI's sister concern or sister branches or sister bank. You know that many banks are under the umbrella of SBI, State Bank of Travancore, State Bank of Maharashtra, State Bank of Saurashtra, and all that. So any of these banks falling under SBI's umbrella, you cannot accept the appointment as a stock auditor if you are the auditor of any of the branches of State Bank of India. So we have to keep in mind, otherwise there is a violation of code of ethics. Supposing you are a concurrent auditor of SBI Gandhinagar branch and State Bank of Saurashtra offers you the statutory audit, you should not accept it. If you do so, it is not ethical or beyond the ethical standard board. Friends, you know that being a statutory auditor, you cannot have the two assignment together, internal audit as well as statutory audit. So concurrent audit is a kind of internal audit. And when you are offered the statutory audit of the SBI umbrella branches, you are not eligible to appoint the auditorship. Supposing, friends, you are the internal auditor of Adani company, and Adani company has its employee fund under the Companies Act and appoints you as a statutory auditor. Can you accept the appointment? I repeat, you are the internal auditor of Adani company, and Adani company has its employee fund and offers you the statutory audit of that company, of that fund. You can accept the appointment because in Adani company, you are the internal auditor, not the statutory auditor. So it is permissible, it is useful guidance. We can take the positive steps and we can accept, we can develop the areas in this direction. Of course, friends, we are not allowed to act as a broker or commission agent, and that's way we cannot accept the custom broker license. If we do so, then we have to face the music. When GST came into existence, many CA firms came together. They started providing training to their clients and the staff of the client. the matter went for the clarification of ethical standard board whether it is permissible, then it was given a permission that two or more firms can come together. They can provide the training to their clients and staff on GST, and they can they can collect the revenue, they can share the revenue, and all that. So it is permissible. Taking a clue of this decision, we can say that there are so many laws and procedures, and there are so amendment coming into laws day in, day out. Trust Act, Companies Act, Income Tax, even TDS. So all these friends, whenever, so you can come together, join hands with other CA firms, you can impart training, you can collect revenue also. So it is also a good area, and ICI is permitted to CA firms to undertake these kind of activities. So I think it is a welcome step and welcome clarification provided by the Ethical Standard Board and the Institute for the benefit of larger benefit of members, friends. Many CAs started providing training on GST to the existing clients, no problem at all. However, in case of non-clients, training can be provided only if the member is invited to provide such training. So my dear friends, you can approach for the training of the staff who are your client, staff of the client. Otherwise, those who are not client and they are not invited you for the training, you cannot go and do the marketing or direct or indirect marketing for solicitation of business, which is not at all permitted to a practicing chartered accountant. And my friends, many members have started sending presentation on GST or write-up on GST, not only to the existing clients, but to the others also. It is not permissible to practice in chartered accountant. We can send the GST presentation and write up to the existing client, and whenever there is a prospective client who requests you to send your presentation or write up, only then you can send the same thing, otherwise not. Otherwise it amounts to advertisement marketing, which is not permissible to our practicing chartered accountants. We cannot mention ourselves as a GST consultant on our visiting card or various other stationery. So many of our practicing chartered accountants knowingly, unknowingly started mentioning on their visiting card that I am a GST consultant. It is not permissible to practicing chartered accountant. Many members share GST update or updates on various laws, mentioning him as a CA with individual name. However, when it is limited for providing updates, there is no problem, but mentioning firm name is not allowed. So taking a guidance from this decision, we can conclude that whenever there is a updation in various laws, we can issue updates mentioning our name without mentioning the name of our firm. So it is a welcome step, welcome clarification by the institute and the ethical standard board. Friends, our institute has come out with the guidelines for the conversion of limited liability partnership. Sorry, conversion of partnership firm, CA partnership firm into limited liability partnerships. However, when there is a conversion of firms into LLP, we should keep in mind that LLPs are subject to the regulations, all regulations, as if they were partnership firm. Mere conversion from firm to LLP does not give you any privilege which is not earlier with the CA firms or not allowed for to a CA firms. Hence, there is no immunity to LLPs from applicability of code of ethics also. So mind well, friends. Yeah, please.
Sir, our time is getting over, sir. So we
Yeah.
would also like to take some question answers. So
Sure. I will be happy to respond.
Yes, sir. So we have received one question like chartered accountants can be a partner in how many chartered accountant firms at a time as per code? Is there any restriction on number of firms?
No. Eligible member can enter into partnership. There is no prohibition any laid down by our code of ethics. No problem. However, partnership firm law may restrict, but our institute or our code of ethics doesn't specify the number.
Okay, yani a chartered accountant can be a partner in n number of firms.
Yes, there is no prohibition.
Okay, sir. Another question is, sir, do you consider that internal auditor should hold shares of the auditee company as they will also be privy to the internal financial information, even if it is permissible?
Yeah, it is permissible, very well permissible. That's why I have brought the useful guidance as done by the ethical standard board, stating very categorically that if you are the internal auditor of a company, you can hold the share of that company, despite the fact you have internal information or not, whatever may be the case. See, the idea is when you are expressing an opinion on the financial information, whether the statements of financial affairs reflects true and fair view or not, and you are holding share also, then there is a hampering of independence on the part of statutory auditor, and that's why not permissible. So whatever not permissible to statutory auditor is now made permissible to internal auditor. So taking this clue, we can certainly hold shares, no doubt about it. Further,
another question is, sir, can a practicing CA become trustee or director in a charitable organization?
yeah, it is permissible. To become trustee, no issue. To become director in a company, no issue at all. See, but you should not do a day-to-day business of trust or company. In the case of company, you can become only director simpliciter, meaning thereby you cannot do any remuneration. You are not holding any. You are not devoting any time for the company's business, and you are taking only the sitting fee for attending board meeting. So otherwise, in day-to-day business, you should not jump. So meaning thereby, you cannot become the managing director or whole-time director or the executive director. You can hold COP if you are a COP holder, but in that case, your status will be a member part-time in practice. Hence, he is not eligible to carry out any attached function. So this is a clarification.
Okay. So you are glad to know that more than 1,700 participants are hearing you, sir. And
oh, great.
Now, sir, thank you very much for throwing light on practical aspects of Code of Ethics. We are very much thankful on behalf of CP Committee, Continuing Professional Education Committee of ICAI. Thank you very much, sir.
Rakesh, I am also thankful to CP Committee, Chairman, Vice Chairman, and the Secretary, sir. And thank you so much to Rakesh, you also, and my co-speaker, Jay. Thank you, friends, and all the participants. Thank you.
Thank you, sir. Now, before moving to our next session on opportunities in IFSC and GIFT City, I would like to introduce today's speaker, CA Jay Shah. He has an experience of more than 12 years in tax and regulatory domain. He has a specialty in tax compliance, merger and acquisition, corporate restructuring, international tax, and FEMA. He has also provided the guidance on structures involving inbound and outbound investment. Now, with this brief introduction, I request our today's second faculty for the topic opportunities in IFSC and to give his lecture on this topic. Jay bhai, your mic is mute, sir. Please unmute
Sorry.
it.
Yeah.
Okay.
Good evening, Rakesh. Thank you so much. Good evening, Parag sir, my co-speaker, members of the CPE committee, and all the participants. The topic for our discussion today is opportunities in Gift City IFSC. So I'll just share the presentation and then we'll discuss this here. Yes. So, as you all are aware, Gift City is Gujarat International Finance Tech City, which is the first and the only international financial service center of India. It is the first IFSC, which is located in Gandhinagar, Gujarat, and it has been established to cater to India's financial service potential by offering state-of-art infrastructure and facilities, coupled with certain fiscal incentives and regulatory freedom. So Gift City has been basically established to dedicate to financial service sector, and it is basically the BFSI sector which can be catered from Gift City IFSC. Gift City is spread over a vast area of approximately 886 acres, out of which around 260 acres is dedicated to SEZ area and the balance is domestic tariff area. So the overall entire Gift City project comprises of three zones, three baskets. One is the SEZ, the other is the domestic tariff area, the DTA, and the third is the associated infrastructure with residential and social facilities like school, hospital, and all other social facilities. So the SEZ area in Gift City primarily comprises of two areas. One is IFSC SEZ and the other is non-IFSC SEZ. The SEZ, which is non-IFSC, that is the service SEZ for other than financial services. And the IFSC SEZ basically caters to financial services. So under the non-IFSC SEZ, the entities can provide services, but they will not be eligible for any tax holiday because now there is a sunset clause on the tax holiday, which was earlier available to units in SEZ under Section 10AA. So any unit which starts operating in SEZ after 31st March 2021 is not entitled for any tax holiday under Section 10AA. However, if the unit is set up in IFSC, then it will be entitled for tax holiday, which we'll be discussing later on. So Gift City has been shaping up well, as you all would be also seeing some of the other development. It is the pet project of our Prime Minister, who had conceptualized it when he was the Chief Minister of Gujarat. And that is why it has a lot of support and encouragement from the government. And daily we would be seeing some or the other regulations, notifications coming in to ensure that there is a conducive and supportive environment for the units in Gift City to provide a boost to the units in Gift City. Recently, we saw that just 2 days back, there was an announcement by the government that they are proposing to increase the area of Gift City by almost 3 times of its existing area. So they are planning to bring in nearby districts, also clubbing them and extending the overall area of Gift City. We just recently saw that Google announced its intention to set up headquarters for its fintech center. There was an announcement that Japanese banks are going to set up branches in Gift City. So all in all, one can see a lot of traction, a lot of action in Gift City happening at ground level. And that is why there is a lot of encouragement from the government side also. And commercially also, one is seeing a lot of action at the Gift City. Moving ahead, Gift City has been established to be portrayed as a financial hub, and it's a globally benchmarked international finance and IT sector. It is first of its kind development in scale, scope, and quality, and it also promises state-of-the-art infrastructure. Coming to the regulatory framework which is applicable for Gift City, currently, the governing provisions are contained in International Financial Services Centers Authority Act 2019. So in the year 2019, the government established International Financial Services Centers Authority, IFSCA, which is basically the nodal authority or the main regulatory body that governs the functioning of and setting up of units in IFSC. So today, if any entity wants to set up any presence in Gift City in IFSC, then they will have to approach IFSCA and they will have to obtain registration from IFSCA. It is only after obtaining registration from IFSCA that the unit will be eligible to commence its operations there. So IFSCA Act 2019, coupled with the regulations, notifications, circulars, guidelines, and FAQs which are issued by IFSCA from time to time, they set the entire governing and regulatory framework for GIFT City. The IFSCA website is a repository of all these regulations, and one can find all these regulations, notifications, and updates at one place, and one can track the development of the regulations that are taking place in GIFT City. Very important, it is important to note that any entity which is set up in IFSC is regarded as a non-resident of India for the purpose of FEMA. So while IFSC is a part of the Indian territory, it is ideally not a foreign land. But for the limited purpose of FEMA, for RBI regulations governing Foreign Exchange Management Act, any entity or unit set up in IFSC is regarded as a non-resident of India. This implies that if there is any transaction which takes place between a resident of India and an IFSC entity, then that will be regarded as a transaction between a resident and a non-resident. So say, for example, if there is an Indian company and it is transacting with a company which is established in IFSC, then it will be regarded as if there is a transaction between an Indian company and a foreign company for the purpose of FEMA, and all the regulations of FEMA will apply in that manner. So a direct implication of this is that if there is any investment by an Indian resident in an entity in IFSC, then such investment will be regarded as overseas investment and outbound investment, which will require compliance with FEMA overseas investment rules and FEMA overseas investment regulations. So ideally, IFSC is regarded as an offshore jurisdiction for the purpose of overseas investment regulations. So whenever an Indian company wants to make any investment in IFSC, then that will require basically all the compliances which we do under ODI regulations. So there will be all checks and balances, as if you can invest not more than 400% of your net worth. There will be certain filings which will be applicable in the same manner which would have applied if the Indian company was to invest in, say, Singapore or Mauritius or USA. Similarly, if there is a reverse investment, if there is an investment which is happening by an IFSC entity into an Indian entity, then it will be regarded as an inbound investment, which requires compliance with FEMA non-debt instrument rules if it is in form of equity, or FEMA debt instrument rules if the investment is happening in the debt instruments. So say, for instance, if there is an entity which is set up in GIFT City and that wants to invest in an Indian company, then the Indian company will have to undertake all FDI compliances, or that investment may also be regarded as a portfolio investment if, say, for instance, that investment is happening in a listed company and there is a fund which is set up in GIFT City, then any investment by that fund in the listed securities of the Indian company will be regarded as a foreign portfolio investment. So there basically the FPI regulations will come into picture and those regulations will have to be complied with. As far as the overseas investment is concerned by an Indian resident into IFSC, it is important to note that last year, in August 2022, the government had released a framework for such overseas investment in IFSC, wherein they had considerably liberalized such overseas investment. So one important liberalization which was undertaken was that today, if there is any Indian company which is engaged into financial services, only that entity can invest in foreign company which is engaged in financial services. However, as far as GIFT City is concerned, the government has made a relaxation saying that the Indian entity, whether it is into financial services or not, it can make an investment in IFSC subject to certain conditions. So one condition is that if the Indian company is into financial services, then it can invest into IFSC. However, it will have to obtain NOC from the regulator which is governing the Indian company. So say, for example, there is an NBFC in India and it wants to make investment into IFSC, then that Indian NBFC will have to obtain NOC from the RBI because RBI regulates all NBFCs. However, there they have put a provision that NOC has to be provided by RBI within 45 days. If such NOC does not come within 45 days, then it will be a deemed approval. So that's a relaxing provision in order to expedite the timelines for investment. Similarly, any Indian company which is into non-financial services, if it is investing into financial services abroad, then one important condition is that the Indian company which is into non-financial services, that needs to have a minimum track record of 3 years as far as its profitability is concerned. However, if that Indian entity wants to invest in Gift City, then this stringent condition of 3-year profitability track record is not applicable. Coming to resident investment by Indian individuals, today any Indian resident individual is not permitted to invest in financial service sector outside India. However, if that investment is proposed to be made in IFSC, then such investment is allowed, subject to certain conditions and filings. So coming next to the opportunities in Gift City, this is an important slide which defines the scope of the activities that can be undertaken in Gift City. So it is very important to note that not any and every activity can be undertaken from IFSC. As the name suggests, IFSC has been set up for undertaking financial services, and that is why it is only certain defined financial services which can be undertaken or operated from Gift City. However, it is worthwhile to note that the government has been expanding this list of permitted set of activities since day one. As and when the government feels that the time is right, they have been introducing new and new services to this list. So we'll have a look at each of these activities in detail in the ensuing slides. But if I just touch upon the broad activities which are permitted in Gift City, these are banking, insurance, and capital market, then fintech, global in-house center, aircraft leasing, ship leasing, international bullion exchange, family office, ancillary services, and foreign universities. These are broadly the permitted business activities that can be undertaken in Gift City. Broadly, we can divide the permitted set of activities into two baskets. One is the key financial service activities, which are point number 1 to 6 and 8 and 9. And there is another set of services, which is ancillary services, which primarily would not be in nature of financial services, but that is something which supports financial services. So that will also be permitted to be undertaken from Gift City. And the idea behind introducing ancillary services, allowing them to operate from Gift City, is to set up an entire ecosystem in the Gift City so that you just don't have the primary financial services there, but you also have the supporting infrastructure so that the financial service entities which are set up in Gift City, they can be catered to from the IFSC itself. One important example of ancillary service which could relate with us is the service of chartered accountants. So CA firms are allowed to set up presence in Gift City as long as their services or their client base comprises of funds or financial service entities. So it is important that the professional services which are set up in Gift City, they have to cater to financial service only. Their end service recipient is financial service unit. Only then they can set up ancillary service unit in Gift City. So we'll take up each of these in detail in next slide. So first is insurance. So there are IFSCA Registration of Insurance Business Regulations 2021, which govern the setting up of insurance units in IFSC. So any Indian or foreign insurer or reinsurer and intermediaries, that is the insurance brokers and third-party administrators, can set up unit in IFSC. What is permitted to be undertaken from IFSC is cross-border insurance business. So basically the IFSC company, the insurance company which is set up in IFSC, that can provide insurance service to either units in Gift City or to offshore units or to NRIs. So the idea is that there has to be a cross-border insurance business. This definitely has a lot of benefits, and it makes business sense for insurance companies to set up units in IFSC if they have offshore business, because there is a lower capital requirement as compared to the domestic insurance provisions which are governed by IRDA. There are also tax incentives which we'll see in some time. and they also get an opportunity to serve the IFSC market from GIFT City. Next is the banking units. So they are called IBUs, IFSC banking units. They can also set up units in GIFT City. So we have seen that almost all major banks in India have set up branches in GIFT City IFSC, be it PSUs or private. Recently also, as we saw, there was news of Japanese banks setting up branches in GIFT City. So there are also many foreign banks which are coming here and setting up branch in GIFT City. The idea behind setting a branch in GIFT City is to have the Indian banks an offshore branch in India itself. So what has been seen is that many Indian banks, which were earlier having foreign branches, now they are gradually catering to their offshore business from GIFT City instead of catering it from their offshore branches. So say, for example, if there is an Indian bank and it was having a branch in Singapore, and that Singapore branch was undertaking certain business outside India, now they can do that same business which the Singapore branch was doing, but from IFSC. Now, what is the advantage of doing so? So we can just understand that with one illustration. So say, for example, there is an Indian bank and it has a branch in Singapore. That Singapore branch has given a loan to, say, an Indian company. So the Indian company has taken ECB from the Singapore branch of the Indian bank. Now, when the Indian company has taken this ECB, currently the treaty rate between India and Singapore is 15%. So the Indian company will be required to withhold or deduct tax at the rate of 15% on interest payment, which it makes to the Singapore branch. Now, normally it is seen that in such cross-border transactions, the Singapore branch would insist that the tax burden lies on the Indian company, on the borrower, and not on the Singapore branch. So normally they would have an agreement which says that the interest payment will have to be made on a grossed up basis. So the Indian company will be bearing the tax cost of 15%. However, if we come to IFSC, then if the Indian bank now sets up branch in GIFT City IFSC, because the GIFT City branch is regarded as a part of India only, it's an Indian territory, any interest payment which is made to an Indian bank is not subject to withholding under Section 194. There is a specific carve out for the same. So this way, any payment which will be made by the Indian company on the loan which it avails from GIFT City branch will not be subject to any tax withholding, which will thereby minimize the cost and tax burden for the company as well as the bank. And at the same time, the Indian company is able to avail the foreign loan facility from the Indian bank. So it serves the purpose for both the company as well as the bank. So the key activities which can be undertaken from GIFT City by the Indian banks or foreign banks are ECBs, trade finance, factoring service, retail banking. Many Indian individuals, they can set up or they can open bank account with bank in GIFT City, and that will be under the LRS route. So banks in GIFT City can also offer retail banking facilities. And then there are, of course, pre-shipment and post-shipment credit facilities which can be offered by the banks. Next is the very important capital markets related activity in IFSC. IFSC today has IFSCA Capital Market Intermediaries Regulations 2021, which has an entire ecosystem of capital market units and constituents. So there are today exchanges in GIFT City, two stock exchanges in GIFT City. One is the IINX, which is the India exchange, which is a subsidiary of BSC, and there is NSC's unit. So basically there is BSC and NSC in GIFT City also, wherein the trading in specified securities can be undertaken. At the same time, one can also set up broking firm in GIFT City. And then there will be RTAs, investment advisors, custodians, and clearing corporations, which can be set up in GIFT City to support the trading activity. Now, what can be undertaken? What kind of activities are permitted to be undertaken on the IFSC exchange? So there can be trading which can be done on IFSC exchange, but it is important to note that this trading cannot be into trading of shares of Indian company, because an Indian company cannot list its shares on the IFSC exchange. There are a couple of developments expected on that front, which we'll discuss later. But as on date, any Indian company's shares cannot be listed on the stock exchange in GIFT City. What can be listed is the derivatives. Also, what can be listed is the debt instruments or bonds of Indian companies. So say, for example, any Indian company which is issuing masala bonds, that masala bonds can be listed on IFSC exchange. Similarly, the GDRs can be listed on IFSC. The offshore securities, so the shares of a foreign company, can also be listed on IFSC. A very key attraction is SGX Nifty. So in July 2023, the entire SGX Nifty got migrated to IFSC exchange, which was now it has been renamed as NSE Nifty. So the SGX Nifty is now traded on NSE exchange in GIFT City. So earlier, the foreign investors, they used to trade on SGX in SGX Nifty, because that was a derivative of the Nifty. So because they could not directly participate on the Indian stock market due to regulatory restrictions, they used to trade in SGX Nifty, and that way they used to participate in the Indian stock market. But now, because this is permitted to be undertaken on the NSE exchange in GIFT City, the foreign investors can basically participate on the GIFT City platform and trade in those derivatives. Next is Bullion Exchange. So last year in July 2022, the Prime Minister had announced the setting up of Bullion Exchange in GIFT City. This is the first Bullion Exchange in India. And the idea is to have a Bullion Exchange in India of an international level. So the Bullion Exchange, which has been set up in IFSC, is referred to as India International Bullion Exchange, which is the IIBX. IIBX has been set up to facilitate trading in bullion depository receipts. Basically, it facilitates trading in gold in demat form, in electronic form. So there are broadly 4 membership categories. So for trading, undertaking trading activity on the IIBX. So just like we have brokers on stock exchange, similar to that kind, you will have trading members on IIBX platform. So either one can come as trading member, or he can be a trading come self-clearing member. So when there is a trading member on IIBX, basically such member can trade into BDRs, Bullion Depository Receipts, either on his own account or on account of other clients who will be then availing the services of such trading member. Similarly, that trading member can also additionally obtain self-clearing membership, wherein he can clear his own trades. Or if he wants to also clear the trades of the clients, then he has to obtain registration as trading cum clearing member. Then there are specific clearing members only. So they are professional clearing members like banks, which only provide clearing services to the trading members on IIBX. Now, the concept of IIBX is somewhat like this, that today, currently, if there is any import of gold or bullion which needs to be undertaken, then an Indian jeweler, he can import gold only from either Indian banks or from nominated agencies, which are nominated by RBI. As a result, what happens is that the banks and these nominated agencies, they normally tend to charge certain commission or brokerage on the price of gold. However, with IIBX, the idea is to ensure a transparent pricing mechanism. So if there is any Indian jeweler who is registered on the IIBX platform, so they need to follow certain procedure and they need to fit in certain criteria which have been prescribed by the IFSC and IIBX. If the Indian jeweler, he satisfies those criteria and he obtains registration on the IIBX platform, then he can obtain registration as a qualified jeweler, QJ. Now, if the jeweler is registered as a qualified jeweler on IFSCA platform, IIBX, then he can import gold directly through IIBX. So the way it will work is that there is any foreign entity which has registered as a foreign supplier, these 2 categories which are listed here, then that foreign supplier can supply bullion to GIFT City IFSC. that bullion will then come in Gift City IFSC, but there will not be any import duty which will be levied on such bullion when it is imported into Gift City, because it is a duty-free zone. So there will not be any import duty. Now, the foreign supplier who has supplied this bullion, he can get that bullion dematerialized. So he can get that converted into demat form. And in lieu of which, he'll be given bullion depository receipts, which are the BDRs, the bullion in electronic form. So those bullion depository receipts will be credited to the demat account of the foreign supplier. And then that foreign supplier can sell the bullion depository receipts on the IIBX platform, just like we sell shares on the stock exchange. And that BDR can be purchased by the qualified jeweler on the platform of IIBX. Now, once the qualified jeweler purchases those bullion depository receipts, he can then get them rematerialized. And ideally, on remat of those BDRs, he can take custody of physical gold into India. And when he takes custody of physical gold, he imports the gold into India. Then, of course, the applicable custom duty will be charged. But that way, the qualified jeweler is able to import gold directly without by bypassing the channel of Indian banks and nominated agencies. And here directly he will be able to see at what price he wants to place an order, and he can then purchase gold at whatever price he seems feasible, rather than paying the commission to the banks, which is being done currently. Recently, IIBX has also permitted import of silver through IIBX platform. So till date, it was only bullion that was allowed, but now they have also allowed silver's import into IIBX Gift City. So that is again a new development. IFSC Bullion Exchange Regulations 2020 contain the governing framework for operating out of IIBX. As far as foreign suppliers are concerned, this IIBX can turn out to be a very lucrative market for companies which are set up in, say, UAE or Turkey, which are having global operations and which are undertaking trading in bullion. They can supply gold here, and they can either obtain registration as qualified supplier client or qualified supplier LPTM, limited purpose trading member, which has now been renamed as special category client. In these cases, they are free to supply bullion. They can sell bullion on the IIBX platform. And as we discussed, the trading can then happen into BDRs. It is important to note that now any trading which happens into BDR on the platform of IIBX, that will not be subject to any capital gains, because BDRs has been notified as an eligible security under Section 47 by the CBDT. Next is AIF in IFSC. So funds can also be set up in IFSC, and IFSC has a very conducive framework for the entire fund industry. Today, there are almost over 60 funds which have been set up in Gift City. And this is only bound to increase gradually. So a typical fund structure in Gift City would comprise of a fund, which will be set up either in form of a trust or an LLP or a company. And that fund will be managed by a fund management entity, which will also be set up in IFSC. There will be a trustee who will be having fiduciary role for the fund. And the fund will then receive investments from non-resident investors and Indian resident investors. And the fund will then invest the money into investee entities in India and outside India. Now, if the fund is going to have investment from resident investors, then the fund would not ideally be able to invest in India. That investment into India would not be feasible, because then it will amount to India investing into Gift City fund and then again investment coming into India. So ideally, if it is proposed that you want to have funds from Indian investors only, then one can always have a look at the SEBI regulated fund, which is the SEBI AIF. However, if there is investment which is proposed to be pooled from non-resident investors, and the investment is proposed to be made in India, if the fund is India-focused fund, then Gift City makes a lot of sense for such funds. Similarly, if there is an outbound fund which is proposed to be set up, then the fund can be set up in Gift City, which can gather funds from resident investors, and the fund can then invest outside India. So just like we have SEBI, which regulates the funds in domestic area, which are the AIFs, Alternative Investment Fund. In GIFT City, it is primarily the IFSCA, which will be regulating the setting up and functioning of the funds. Additionally, if this fund in GIFT City proposes to invest in listed securities in India, say on in listed shares, then such fund will also have to obtain FPI registration, foreign portfolio investor registration, from SEBI. As far as the funds in IFSC are concerned, the government has introduced many relaxations for the investors. So the non-resident investors who do not have any other income in India other than income from the fund in GIFT City, they have been exempted from the requirement of obtaining permanent account number PAN in India, and they will also not be required to file any return of income in India. One very other important regulation or provision in the Income Tax Act is for relocation of funds from outside India to GIFT City. So today there are a lot of funds which have been set up in Mauritius, Singapore, Cayman Islands, or Cyprus. So earlier people had set up funds here primarily because of tax reasons, because these countries offer a very efficient tax regime, and that is why funds had been set up in these regions. However, there was always a question or a challenge of substance, because the core team was sitting in India and the investments were also, say, primarily focused into India only, but the funds were set up outside India. So there was always a question from the Indian income tax authorities as to how these funds which are set up outside India are being managed from India. So they always used to seek to tax them in India by treating them as residents of India on grounds of POEM and other substance requirements. So this was prone to a lot of litigation. But now with GIFT City, an avenue is available to such funds to shift their base from outside India to GIFT City, because it is naturally quite easy to have substance in GIFT City, because then you are primarily in India only, and your cost of operations also, cost of operating the fund also comes down lower, because setting up an operating fund in India is relatively cheaper as compared to operating a fund from, say, Mauritius or UAE or Singapore. So fund in GIFT City definitely is a good option for such offshore funds. And to facilitate such migration, the Income Tax Act enables a tax neutral relocation from offshore fund to GIFT City fund. So suppose today there is a fund which has been set up in Mauritius. Now it proposes to shift its base to fund in GIFT City. Then naturally, if the Mauritius fund wants to transfer the securities to GIFT City fund, that will ideally entail theoretically capital gains tax implications, because there will be a transfer from Mauritius fund to a GIFT City fund. However, in order to ensure that such migration and to encourage the offshore funds to come to GIFT City, the government has proposed that such migration, such transfer will not be subject to any capital gains tax, provided such relocation happens before 31st March 2024. So till last year, the date was 31st March 2023. Then in the current year's budget, the date was extended to 31st March 2024. So if such relocation happens by that date, then there will not be any taxes on such share transfer or transfer of securities. Also, to facilitate such migration, SEBI has also come up with a circular saying that ideally, if today any transfer of shares by SPI can only be on market, they are not permitted to undertake off market transfer. So suppose there is a fund which is set up outside India, say a Mauritius fund, and it has invested into Indian listed securities, Indian shares, say shares of Reliance or shares of TCS, listed shares, then they cannot do off-market transfer. However, in order to encourage them and to support them to transfer the shares to GIFT City fund, SEBI has come up with a circular saying that as a one-time move to facilitate them to come to GIFT City, the Mauritius fund can undertake an off-market transfer of shares of listed companies to GIFT City fund. Broadly, there are three broad categories of fund management entity. So the way the entire framework of registration, how it operates in GIFT City is that the fund management entity, the fund manager, the ideally the investment manager will have to obtain registration from IFSCA. So unlike a SEBI fund where the fund has to obtain registration and the IM, the investment manager, is not required to obtain any registration, in case of Gift City, it is the fund management entity which needs to first obtain registration from IFSCA. After the fund management entity has obtained registration, the fund also will have to obtain registration for its scheme. So each scheme will have to be registered in Gift City, and then they can commence operations in Gift City. As we discussed, there is an ancillary service framework which is permitted in Gift City. Here, ideally, all the incidental or ancillary services in nature of consultancy, bookkeeping, accounting, legal services, which are provided to support the main financial services, they are permitted to be carried out from IFSC. However, it is very important that these services are provided to financial services only. So say, for example, if there is any bookkeeping service or accounting service which is being offered to banks, to stockbrokers, to insurance companies which are set up either in Gift City or which are outside India, then such bookkeeping or accounting firms, they can definitely set up their shop in Gift City. Similarly, there are asset management support services and trusteeship services which can also be set up under the ancillary framework. Next is shipbroking, which has been recently introduced by IFSC just a couple of months ago, wherein shipbroking has also been now allowed as an ancillary service. Because ship leasing is allowed, so shipbroking also has now been allowed in IFSC as an ancillary services. So any shipbroking entity can also be set up in IFSC now. I think we touched upon most of these service sectors, but just on a few of them which we did not consider. So there is, say, fintech. So fintech is a very important service line which has been permitted in Gift City. And the vision of the government is to make IFSC as a global fintech hub. So if there is any company or any entity which provides financial technology solutions, which develops such fintech products for BFSI sector, for either banks or stockbrokers or insurance companies, then such fintech entities can definitely set up a shop in IFSC as long as their service recipients are either IFSC companies or foreign entities. So fintech units, of course, cannot provide service to domestic clients in India, but they can segregate their business operations. And if they are catering to foreign clients or to Gift City clients, then a fintech unit can be set up in Gift City. Again, here, the fintech unit can either obtain registration under direct authorization route, or they can even come under the sandbox regime. So if the fintech already has a developed product, a tested product, then it can come under the direct authorization route. However, if its product is in a testing phase and it wants to come on a pilot basis, then basically it can come under the sandbox regime, wherein they can be onboarded very quickly. And only if their product is successful and they think that, okay, the launch will be successful on a commercial basis, then they can subsequently obtain registration with IFSCA and then start their operations in Gift City. Third, the global in-house center. This, of course, till date, only 2-3 companies have set up global in-house centers in Gift City. But the idea here is to set up a global in-house center to provide back office services to the financial services. So suppose, say, there is a foreign bank and it wants to set up a global in-house center in Gift City to provide all back office admin support to the foreign bank, then that can be done in Gift City. Aircraft leasing and financing and ship leasing is also another very important area which has been opened by the government. So there are finance company regulations in Gift City, IFSCA, and that is where they have expanded the list of non-core activities to even include aircraft leasing and ship leasing. So that can be undertaken from Gift City. The idea of government is to make IFSC as a aircraft leasing and ship leasing hub, just like we have, say, Panama, Singapore, Dubai, or Ireland. The government intends to have a level playing field in Gift City. That is why they have also come up with a very favorable tax regime for aircraft leasing and ship leasing companies, so that the companies can carry out leasing activities from India, from GIFT City. Family office is another important area. So as we discussed that funds can be set up in GIFT City, just a variant of that is family office. So currently single family offices can be set up in GIFT City. Fund management entity regulations, FME regulations provide, they permit setting up of such family office in GIFT City. So say for example, there is any promoter family, they set up a family office in GIFT City, and then that family office can invest outside India into different securities. So today, such kind of investment is permitted under IFSC regulations. There are two applications already in the pipeline that's in public domain. Wipro and Infosys have already made applications, which are almost on the verge of finalization for approval at IFSC level. However, as far as RBI is concerned, that is still there is lack of clarity, because such kind of family office setup in GIFT City would result in flight of capital from India. And that is why still some clarity is being awaited from RBI. Once there is a clarity, then that would provide a lot of regulatory clarity on whether a family office can be set up in India and whether they can invest outside India. However, as far as a reverse setup is concerned, that is very much possible, wherein a foreign entity can set up a family office in India, and then that family office can invest abroad or in India as well. Next is foreign university. So two universities from Australia, they have already announced their intent to set up university in India from Australia. One is Deakin University and Wollongong University. So there is a framework which has been prescribed by IFSC, wherein these universities can provide certain courses in financial management, mathematics, engineering, and fintech. So that is also something which is allowed in IFSC. Before we go to fiscal incentives, which is very important to know what all incentives are available in GIFT City, one important criteria which needs to be ensured is that IFSCA insists that a principal officer and a compliance officer, there are two officers who are designated as principal officer and compliance officer, they need to be based out of in GIFT City, primarily to ensure that the GIFT City company is not a mere paper company. So today also the IFSCA insists that, say for example, if you are setting up a fund and a fund management entity, then you need to have a principal officer and a compliance officer who have experience in fund management industry or in securities market industry, and they have certain prescribed, they are meeting certain prescribed qualification criteria. So either they are professionals or they have certain post qualification criteria, then they can be appointed as principal officer or compliance officer of such fund management entity. The idea is to ensure that there are people actually sitting in GIFT City office, and to gradually provide a boost to the ecosystem, because as in when people will start coming in, the entire ecosystem for a residential housing and everything will get a boost. So that is something which one needs to be mindful of, and that is also important from an income tax perspective, because from a substance perspective, while today these regulations are quite new and at a nascent stage, but 2-3 years down the line, we definitely would be seeing notices from income tax department wherein they can question and they can ask to justify whether there is enough substance in the GIFT City company so as to allow the claim of tax holiday. So overall, from that perspective also, one needs to ensure that there is at least a minimal requirement, there is a presence in GIFT City to the extent which is feasible and required. The fiscal incentives which are available in IFSC, the most important tax benefit is tax holiday to units in IFSC, which is equal to 100% of business profits for 10 consecutive years out of 15 years. So from the first year, when you start commencing your operations, when you have obtained registration, starting from there 15 years, first 10 years you can choose, and consecutive 10 years you will be eligible for tax holiday. It is important to note that this tax holiday is only for business profits, and this does not apply for any other income stream. So that IFSC unit, if it has a capital gains, then that will not be eligible for tax holiday. MAT is also applicable at a lower rate of 9% as against normal 15% in case of a company, and AMT will also be applicable at 9% for LLP. However, if the company which has been set up in GIFT City that opts for new tax regime under section 115BAA, then even the MAT will not be applicable. So net, a company which is set up in IFSC, if it has opted for a new regime, then it does not have to pay any corporate tax. It does not have to pay any MAT also. There is no securities transaction tax and commodity transaction tax for any transaction which is undertaken on an IFSC exchange. Similarly, there is a capital gain exemption for sale of specific securities which is undertaken on the exchange platform. So say, for instance, if a non-resident transfers or sells any security on the exchange platform, there are specified list of securities, say derivatives or GDRs or Boolean depository receipts, then there will not be any capital gains tax levy on such transfer. Similarly, if any non-resident has advanced loan to any unit in IFSC, then any interest income earned by such non-resident will also not be taxable in India. Any royalty income which is earned by a non-resident on account of ship leasing or aircraft leasing in GIFT City will also not be liable for tax. We already discussed tax neutrality provisions for relocation of offshore funds to GIFT City, so that tax-friendly regime is already in place. Also, certain income of an AIF, which is set up in IFSC, is exempt from tax subject to certain conditions. So if there is a category 1 or category 2 AIF, then they are as such subject to pass-through regime under section 115 BU for a normal business trust, as we have for normal investment funds. But as far as category 3 AIF is concerned, any income which arises to such AIF from investment in offshore securities, then that is not taxable. So the idea is to offer a level playing field, to offer parity between a GIFT City fund and an offshore fund. Because today, suppose there was a Mauritius fund, and that Mauritius fund has invested in, say, shares of Apple, and it makes capital gain from such sale, then that is not taxable in India because that does not have any nexus with India. So to provide similar relief, the government has prescribed that if there is any AIF category 3, which say invests in shares of Apple, and there is a capital gain on sale of such shares, then that will not be taxable in India. Also, there is a lower tax rate applicable of 4% to a non-resident on interest income which arises on long-term bonds and rupee-denominated bonds, which are listed only on IFSC exchange. This tax rate has increased to 9% from 1st July 2023, but it is still lower as compared to the normal tax rate, which is applicable in India for the normal corporate tax rate. Coming to GST, GST is not applicable on any services which are received by unit in IFSC. And there is also no GST levy on any service which is provided by IFSC to offshore clients, because IFSC is a part of SEZ. So a benefit which is available to SEZ for GST, that will also be available to IFSC units. Also, there are certain specific exemptions which have been provided. For example, any intermediary service which is provided by a unit in IFSC, normally any intermediary service, there the place of supply is deemed to be India under GST law. But for IFSC units, there is a specific exemption subject to some conditions. There GST will not apply. There are also stamp duty exemptions which are applicable. So a stamp duty is not applicable under the Indian Stamp Act to any unit in IFSC. But practically, whatever exemption is listed in the eligibility certificate which is granted by the SEZ authority, that stamp duty exemption will be available. Coming to the process flow, broadly as a starting point, the unit which proposes to set up presence in GIFT City, they need to identify an office space in GIFT City. Today, almost all the office spaces have been sold out and they are occupied. However, there are certain co-working spaces which are available, and that is the only option as of now. So if any company wants to set up a unit in IFSC, they will have to obtain office space, and that can be obtained in form of a co-working space from the real estate developers in GIFT City. Once you have office space, you have to obtain provisional letter of allotment from the developer. Once the provisional letter of allotment is there, application needs to be made to SEZ authority. and to IFSCA. The applications need to be made in parallel to both the authorities. SEZ authority will issue final letter of approval to the unit, and subsequently there will be an IFSC approval. Once these approvals are in place, there will be a lease deed execution, and then the unit is good to go. They can commence operations in GIFT City. So what is in the pipeline? This we saw is what all is there as a part of the current regulatory framework. But there are, as we discussed, a lot of developments which keep happening day in and day out in GIFT City. So there are a lot of developments which are expected to happen in near future. One of the most important development which is expected and which has already been announced by the finance minister, and recently the IFSCA chairman had also announced that what is being proposed is that the government intends to allow Indian listed as well as unlisted companies to directly list on IFSC exchange. So any Indian company can now list on IFSC exchange. So today, any Indian company can list only on BSE or NSE. They cannot list on any international exchange. So offshore listing is not allowed, but with this, the government intends to allow offshore listing by way of listing on IFSC exchange. So this could be a landmark reform if it is allowed. The IFSCA chairman had recently said that this is expected to be operationalized in next 3 to 4 months. Next is delegation of powers under the SEZ Act to IFSCA to avoid dual regulation. So as we saw in the earlier slide, as a part of the process flow, currently the registration needs to be obtained from SEZ as well as the IFSCA authority. However, in current year's budget, the FM had already announced that the plan is to subsume the powers of SEZ Act with IFSCA so that there is a unified single regulator in true sense, and the applicant has to make application only to one authority. This also is in the pipeline, and the government is in the process of notifying this change. But as on date, of course, right now, application needs to be made to both the authorities. In the budget, it was also announced, and this is also work is in progress on this front, wherein it is being proposed to set up a single window IT system for registration and approval from IFSCA, GSTN, RBI, SEBI, and IRDA. So if you want to obtain PAN, GST, IFSCA registration, there would be a single window clearance. So that also is in the pipeline, and a pilot project is soon expected to be announced. An international arbitration center is also likely to be set up in IFSC, and a regulatory framework on that lines is being developed. Very importantly, and something which is of interest for all chartered accountant firms, is that a framework for global accounting services is being proposed. So the FM had announced some time back that they are proposing to bring up a framework for global accounting services, wherein even if you are providing accounting service or outsourcing services to not only financial services but non-financial service firms also, then also they can set up units in IFSC. So if this is proposed and this is implemented, it could be a game changer for the profession. Holding company regime, the IFSCA has introduced a consultation paper wherein they propose to make IFSC as a holding company hub. And the idea is to avoid flipping, which is very much prevalent today in the startups. So today, many IT startups, we have seen that they tend to flip their entire structure to overseas, wherein instead of India headquartered, they normally tend to have either headquarters in US or Singapore, wherein their main operations are still in India. So the idea is to have such a holding company in IFSC and to provide them a favorable tax and regulatory regime so that they can have their holding company in IFSC only, and they are not forced to go outside India. Yeah, so I think this is it. Broadly, this covers the existing regulatory framework, what all is allowed in IFSC, and what all is expected in the pipeline.
Yeah. Thank you very much, Jay. Jay, we have some questions from the participants.
Sure.
So one question is that, can we as a chartered accountant firm open office in a GIFT City?
Yes. So as we discussed, a chartered accountant can open office in GIFT City. Currently, as per the current regulations, the chartered accountant can open firm in GIFT City only if he's providing tax, audit, or accounting service to financial service firms. So the end recipient, the customer, basically should be either a bank or a financial institution or a broker. So someone who is in the financial service sector. And that should be outside India or in GIFT City. However, what is being also proposed is that the government is proposing to come up with regulations wherein chartered accountants can set up firms in Gift City to cater to accounting to foreign companies, even if they are not engaged in financial services. But currently, you can set up shop in Gift City only if you are providing services to financial services.
Okay. Another question is Indian companies share cannot be traded in IFSC exchange, but offshore companies shares will be eligible for trading.
Yes, that is eligible for trading. If the offshore company lists their shares on IFSC exchange, then that is eligible for trading. So trading of offshore company shares is permitted.
Okay. Thank you very much, Jay, for giving us a useful information on opportunities in IFSC and gift cities. I also thanks to all the participants who have joined in today's webinar. Thank you very much, sir.
Yeah, thank you, CP committee for providing this opportunity, and thank you all participants for attending the session. Thank you.
Thank you.